Hi, this is Michael Rony Mullick, and you are watching the pre-market show. And yesterday, markets in the US, we saw a fantastic rally happening because of the the geopolitical tension between the China Taiwan that has not escalated as expected. So things are looking very bullish in the US markets. And if you look it up the charts, we can see S&P 500, Nasdaq, and Dow Jones, all three indices up and doing significantly in the green. So Nasdaq, the best of the bunch, up by 2.7 percentage yesterday. You can see a strong green candle forming in Nasdaq. Definitely good to see that. Coming to Dow Jones was up 1.2 percentage, but the recent high is yet to be broken. In Nasdaq, that has already been broken, so that indicates a lot of strength in the markets. For the Nasdaq index, S&P 500 also managed to break the recent highs, but there is again a stiff level of resistance that it can face around 4,200 levels, so we have to watch out for that as well. So that is the US markets. It ended firmly in the green yesterday, and right now it is trading slightly lower, but nothing significant as much, because it is the US futures are lower by 0.08 percentage. This is S&P 500, Nasdaq down by 0.16 percentage, and Dow Jones down by 0.05 percentage. So nothing significant happening. And coming to the Asian markets, all the indices are trading in the green. So that is again very good to see. Hong Kong markets up by 1.9 percentage. So very strong recovery in the Hong Kong markets after the recent fall. Chinese market doing pretty well, up by 0.5 percentage. The this is the Japanese market, and Chinese market up by 0.45 percentage, almost similar. And Korean markets also not lagging behind, up by 0.3 percentage. So all the Asian markets are trading in the green. And coming to the other things, we have the US VIX. It collapsed almost 8.3 percentage yesterday. Definitely the volatility in the US markets coming down. That is very important. And finally, it has settled at 21.94. If the US VIX also falls below 20, then we can expect the next leg of rally to continue in the markets. Indian markets, although the VIX is up, markets have been volatile, but on a close-to-close basis, it is trying to close at the day's high. So India VIX is at 18.45. And coming to other things, the crude oil prices are definitely coming lower and lower. It is trading at 91.04, and a close above below 90 can bring the crude oil prices further down. I've been telling this for many days now. So let us look at the other things. The currency index, we have the dollar index at 106.388, slightly up is what we are seeing, but nothing significant. And USD INR is also doing pretty well at 79.16, although yesterday there was some kind of short covering happening in the USD INR, but that is fine because the markets don't fall in a straight line. It obviously comes down, then it slightly goes up, takes a pullback, again falls further. So that is how it happens. So nothing to get panicked about. Indian markets are still looking strong is what I believe. Apart from that, SGX Nifty is showing a huge gap up once again at around 17,484. So our markets closed in 17,388 yesterday, and if you consider the SGX Nifty levels, it is indicating a gap up of almost 100 points plus. So let us see how the markets trade. And very interestingly, SGX Nifty last night showed a high of 17,540. So that was the high, but it has come down slightly from there, so nothing to worry about. But the Nifty over here ended at 17,392. But overall, if there is a huge gap up, we know that the people who had sold call options right at 17,500, we saw a huge amount of call writing been happening. Still the highest OI is built up around 17,500. So in case the markets open with a gap up, obviously it will open with a gap up because all the global cues are in line with that. So in case there is a huge gap up and markets are breaking 17,500, then we can expect an upward momentum towards 17,600, and the next level of resistance come around 17,635. So definitely watch out for this level. I'm not expecting 17,635 to be breached today, because that's an important level, and it is way above the 17,500 levels, so that has to be watched out for. And in case 17,500 is broken, these people will have to run for cover, those who have sold call options. That is why the markets will be going higher, just because of short covering. So keep in mind about the short covering that can happen on the upside, and not expecting much down moves today. So in case there is a profit booking, the markets can fall down towards 17,435 on the lower level, and then if that is broken, yesterday's high should act as a level of support, and finally 17,220 should act as the last level of support. Not expecting the markets to go down below 17,220 today, because it's a buy on dips market. As you can see, every day the markets are opening, there's a sell-off in the first half, but towards the second half, most probably the foreign institutional investors are buying in huge quantities, and they are picking up the markets, and it's closing at a new high. So this has been the case for the last many days, and especially for Monday. It was the third consecutive day yesterday when the markets, the FIIs, the foreign institutional investors, have turned net buyers. So expecting a recovery towards the second half, but it's an expiry day. As you know, the first expiry of the month, this is 4th August. So expect volatility in the markets. So I believe there will be options for both buyers and sellers. Today, everyone will get the opportunity. The only thing is maintain your stop losses and trade in the direction of the markets, and that is the only advice I can give. Coming to Bank Nifty has been slightly weaker compared to Nifty in the past few days, but yesterday when the Nifty managed to close above the day's high, Bank Nifty struggled around there. It ended slightly below the day's high, but we have been seeing 38,000 acting as a very, very stiff level of resistance. Markets already have broken, but it could not sustain above those levels. It came down. Yesterday also it tried. So the more amount of time the market tries to break the level, it becomes weaker, and one fine day it can break above that level, and one closing above 38,000 can propel the markets even higher. We have to wait for that. And today, if you look at the Bank Nifty, same thing, 38,000 has the highest amount of call build up. So in case the markets are trading consistently above 38,000 and above, then similarly, like Nifty, there can be a short covering. Same thing can happen in Bank Nifty. A short covering can be expected. So if the market breaks 38,180 on the upside, that is where the panic will set in the minds of the call sellers. Then the markets can be propelled higher towards 38,300 to 400 levels, and maximum level it can go is 38,500. Let's be conservative here and say 38,500 to be the maximum point on the upside where the markets can take a resistance. So that is what I'll be looking at on the upside. And on the downside, we can expect multiple resistance to come in the levels of around 38,000. Definitely we are expecting a huge gap up. So easily, if the Nifty is having a gap up of 100 points, Bank Nifty can open up 200 points higher, and then if there is a profit booking, 38,000 should hold. If that is broken, yesterday's low can be considered as an important level of around 37,700 is the low yesterday, so that you can take into consideration. If that is broken, 17,630, and finally 37,380. So 37,630, 37,380, these are the levels on the downside I'll be watching out for, and 37,380 on the downside should not be broken in today's expiry, because markets are still bullish. And so these are the levels you can watch out for, expecting a buy on dips market, like I said. So every time there is a fall in the first half, the second half the FIIs are buying. So keep that in mind when you are trading, and hope you have a positive expiry. In case you are focused on some stocks, so keep in mind that some companies are coming out with its quarterly results today. Adani Enterprise is there, it's coming out after market hours, so that is fine. Britannia Industries after market, Berger Paints after market hours, and then in Nifty 50 stocks we have Gale. I think, yes, Gale is coming out with its results during market hours. So you can keep this in mind if you're trading these stocks, because the earnings report, whenever the quarterly results are announced, the markets tend to be quite volatile. So these are the things you can watch out for. So the things look bullish as of now, so expecting a huge gap up, and the question is, will it sustain? Will the markets close above 17,500? If that is happening, then we can expect the next leg of rally to set into the markets, and 17,600 levels is very important, and multiple times the market have taken in the past. If you go back to the chart and see 17,600, you will understand its importance. So that is all for now, and hope you have a positive expiry. Thank you for watching and have a nice day.